Total madness. I mean, that is literally the only way to describe the absolute shockwave that just ripped through the markets. Let's dive right into this, because right up until 1:45 p.m., absolutely nobody saw this coming. The Nifty was coasting comfortably right around the 24,200 level. Traders were feeling confident. They thought the 24,000 mark was this unbreakable support floor, but instead of holding, that floor completely caved in. We are talking about a sudden, devastating 400-point plunge that didn't just break the 24,000 level, it absolutely shattered it, dragging the whole market down past 23,900 and finally hitting the brakes somewhere around 23,820. Wiping out over 2% of the market in mere minutes, that is not normal market behavior. It's a huge red flag, a symptom of a massive unseen collision happening behind the scene.
Welcome to The Explainer. Today, we're basically putting on our geopolitical detective hats to trace exactly how a massive breakdown in international diplomacy bled directly into your portfolio. We're going to connect the dots between shattered peace deals, sudden military strikes, and those bleeding numbers on your trading screen. Because to understand why your stocks, your gold, or your crypto are suddenly in a free fall, we have to look way beyond the financial charts and peer right into the heart of a rapidly escalating global crisis.
Section 1. Canceling the Iran MOU.
So, to find the root cause of this market crash, we actually have to look at a rushed peace agreement that fell apart before the ink was even dry. You see, the markets had priced in a major de-escalation based on an expected peace deal that was targeting an August 18th signing date. Instead, what we got was this hasty, premature 10-point agreement dubbed the Islamabad MOU, which was pushed through on July 17th. And the geopolitical environment leading up to this rushed MOU was already intensely volatile. It all kicked off back on February 28th with the assassination of Iran's supreme leader, Ali Khamenei. By the time his multi-day funeral proceedings began around July 4th, all that grief had morphed into intense public rage, with massive crowds chanting against Donald Trump. According to the source material, Trump took these highly publicized chants very personally, which fundamentally shifted the tone of U.S.-Iran relations right at the exact moment they were supposed to be negotiating peace.
Well, this personal animosity exploded onto the global stage at the recent NATO summit in Turkey. The source details that Donald Trump used some highly charged language, referring to the Iranian people as scum and a cancer. This aggressive posturing actually triggered an immediate diplomatic rift with Spain. Spain stepped up and preemptively declared they would not allow U.S. military aircraft to use their airspace if it was for an attack on Iran. And in response, Trump completely severed diplomatic ties with Spain. The immediate financial fallout of that was severe. The Spanish stock market, the IBEX, instantly plummeted by 2.66%, falling from the 20,000 level straight down to 19,000. Geopolitics instantly became market reality.
But the real fatal flaw of this deal? It was hiding right inside the Islamabad MOU itself. This 10-point plan was basically doomed by a massive, catastrophic communication gap. In the Farsi translation, Iran explicitly included a condition that there would be no attacks on Lebanon, knowing full well the proxy dynamics with Israel. However, the United States version of the MOU completely ignored the Lebanon angle, focusing solely on securing passage through the Strait of Hormuz. They essentially signed two different realities. And, when you have two fundamentally opposed understandings of a peace treaty, war is usually the result.
Section 2. Retaliations and military strikes.
That fatal misunderstanding, it basically acted as the starting gun for a terrifying chain reaction across the entire Middle East. Almost immediately after Donald Trump's aggressive actions and those conflicting terms effectively canceled the fragile MOU, Israel initiated what they called Operation Eternal Darkness. Now, this wasn't just some minor skirmish. It was a staggering barrage of 100 targeted airstrikes leveled against Hezbollah in Lebanon, and get this, all executed within a span of just 10 minutes. Because the U.S. version of the MOU didn't protect Lebanon, Israel proceeded. But for Iran, whose version explicitly forbade this, it was seen as a direct, unforgivable violation of the peace terms. The MOU was officially dead.
The tit-for-tat retaliation spiraled out of control at lightning speed. Step 1. By July 7th, 3 commercial ships were attacked in the Strait of Hormuz. And notably, the attacks didn't just come from Iran. Oman actually actively participated, which signaled a really dangerous widening of the conflict. Step 2. The U.S. military responded with overwhelming force, striking 80 distinct Iranian Islamic Revolutionary Guard Corps facilities and destroying 60 of their boats right there in the strait. Step 3. Iran immediately struck back, targeting exactly 85 U.S. military facilities in the region. We literally went from a canceled peace deal to a regional war in a matter of days.
So here is the crucial point for us.
This physical warfare immediately triggered total economic warfare. The U.S. clamped down, reinstating a strict naval blockade in the Strait of Hormuz, which is the vital artery for global oil supply. They demanded an unprecedented $1 million toll per ship just to pass through, effectively choking global trade. Furthermore, the U.S. entirely suspended Iran's general license to sell oil. And amidst all this chaos, a Pakistani cargo ship with 5 crew members mysteriously crashed in the Gulf of Oman, which just added to the extreme paranoia that's disrupting global shipping routes right now.
Section 3. The crude oil tripwire.
So how does a naval blockade thousands of miles away actually impact you? Well, we have to connect these abstract military escalations directly to your investment portfolio. The very first domino to fall, the ultimate economic tripwire, is crude oil. And these numbers are your absolute battle lines. For crude oil, the magic number is $79. It's currently sitting around $74, but if crude breaks above $79, that signals the market has fully priced in a major war and we will absolutely see a severe market drop. But if it breaks 90, the source warns we could actually be looking at a devastating 2008-style global market crash. Similarly, Bitcoin traders must watch the $54,000 floor and the $65,000 ceiling. Keep these numbers locked in your mind.
Section 4. Gold and crypto crash. Let's shift our focus for a second to how historically safe haven assets and highly volatile ones are reacting to all this macro geopolitical chaos spurred by the canceled MOU. Right now, gold is entirely trapped in what technical analysts call a descending triangle pattern. On the surface, it might look like it's just moving safely sideways, but do not be fooled. A descending triangle is a coiled spring. The critical support line is sitting right at 3,900. If this geopolitical pressure forces gold to break below that support, the chart points to a violent, massive drop straight down to a target of 3,700. A major move is coming in July, and the trigger for that move is heavily dependent on the U.S. government.
Which brings us to the ultimate catalyst, the Federal Reserve. According to our source analysis, upcoming Fed data will decide the immediate fate of these markets. It's noted that Kevin Warsh, a Trump appointee, is heavily scrutinized here. If the Fed announces interest rate cuts, the markets could see an explosive, rocket ship rally. But if they announce rate hikes amidst this global tension, the source bluntly states the market will cry tears of blood, sending assets like gold plummeting downward.
And for anyone out there holding crypto, you really need to pay close attention to how this macro chaos is crushing digital assets. Despite all the usual hype, Bitcoin is currently trapped in a dangerous bearish trend. The absolute ceiling, the heavy resistance you need to break to even think about a bull run, is $65,000. Until it crosses that, do not rush in. On the downside, $54,000 is your ultimate support floor. If that level snaps, there is literally nothing holding the market up. It opens a trapdoor that could send Bitcoin plunging straight down to the $39,000 to $40,000 range. Caution is absolutely paramount right now.
Section 5. The next black swan.
Okay, so we have a Middle Eastern crisis, a canceled MOU directly causing military strikes, and economic tripwires flashing red across gold and crypto markets. But what if an entirely different, newly brewing tension point could blindside the global financial system next? Let's turn our attention to South Asia for a minute, because right now, a sudden and intense wave of severe protests has erupted across Pakistan-occupied Kashmir, or POK. The local citizens are actively taking to the streets, visibly rejecting Pakistani control. This is a massive surge in local instability in a region that is historically known as a nuclear flashpoint.
And this instability is being met with some incredibly strong, definitive rhetoric from the Indian government. Listen to this statement from India's External Affairs Minister, S.J. Shankar. He plainly stated that POK returning to India is an actual national commitment. This isn't just casual political talk, folks. This underscores rapidly escalating diplomatic stakes that could fundamentally alter the geopolitical map of the entire region.
So I want to leave you with this thought to consider. We've just seen how a canceled MOU in the Middle East wiped out 400 points on the Nifty and crashed global markets in a matter of minutes. With the financial world already balanced on a razor's edge, could a renewed escalation between India and Pakistan over POK be the next black swan event? Are your investments truly shielded from the geopolitical dominoes that are already starting to fall? Thank you so much for joining me on this explainer. Stay sharp, watch those support levels, and keep learning.